Hello guys, welcome to another video. Today I want to talk about the 4 types of order blocks. The first type is the engulfing candlestick order block. We recognize that by an engulfing move with momentum that has caused a break of structure in a market like this. Then we take the last down move before the up move. Basically, I like to take this whole zone. It also left some imbalance and it left liquidity over here. Then you can see it filled the order block, filled the imbalance and went up again. You could say I put my limit order on here. I put my stop loss below here. Personally in our course, we don't trade like that. We switch to the seconds time frame or the minutes time frame and look for confirmation here to enter. The second order block is the magnetic candlestick order block. This is basically an indecision in the markets. But as you can see, it left multiple candlesticks. It broke down with momentum, came back, and you could say I enter early, I enter here. You would get in the move. But what we like is to wait. As you can see, it filled the order block here. It came back. It took out the early sellers in this case, and it showed momentum downside. It took the stop losses here and showed momentum downside. Also here I don't like to put limit orders. I never do. I always look for a confirmation order on the minute or on the seconds. As you can see, it gave a nice reaction after the sweep. It gave a nice reaction down and you would get a very nice trade. Then the third form, the indecision candlestick order block. This is an order block that has a lot of indecision in the markets. And the market didn't know where to buy or to sell. Eventually, the price got up with momentum. So this is our indecision candle and this forms our order block. It also left a nice inducement. We as smart money know this is liquidity and has to get taken out. What it did was it filled the order block, gave confirmation on the seconds and shoot up. A very nice trade again. Then for the fourth type, we got the breaker block or the flip zone. As you can see, the market gave us continuously break of structures to the downside, which also left a nice supply zone to trade from. And this is why I say I never enter with limit orders. It bursted through and it gave us a change of character. The change of character is basically a breaker block or a flip zone. And as you can see, this was basically a magnetic candlestick. So what we tend to do is we use this zone as our demand zone in this case. And we look to trade from here with confirmation again. You never want to put a limit order on here, because if you draw a Fibonacci from this low to this high, this maybe would have got into 0.5 levels. But we don't want to trade from there as smart money. So we would choose this zone with imbalance. But in this case, as this is a breaker block with a lot of volume, probably news volume, we could look for confirmation here. And if you got the confirmation, as we did, because it gave a, I can see it, it's on the seconds, it gave us a chock here, momentum up, a pullback, which this would be our order block, stop loss below this low, and we would have gotten a very nice trade. So yeah, these are the 4 zones we are looking at. I hope you enjoyed the video. I hope you learned something from it. And yeah, please like and subscribe and tap the notification bell to stay updated on future content. You could also take a look at my Instagram. I post a lot of content on there. You can learn a lot from. And you could also take a look at my website